What is going on, Discord family, and welcome back to a new special edition market review um, with me, T. Hobbs. Today is March the 31st, 2025, year of our Lord, heading into April now. I call this a special edition because I usually don't do market reviews if I don't trade, right? Because I don't have a pre-market plan, but I'm doing it because I want to stay consistent with giving you guys the content that you deserve. So that being said, I'm going to bring up one of the pre-market plans from one of the members. Shout out to Trading Yoga Girl. I'm going to start with her S&P plan, mostly because she charts and looks at price very similar to the way that I look at price. Kind of taking her under my wing with these pre-market plans. It's kind of like my weapon of choice, right? So anyway, let's get right into it. She said, we opened up on Sunday, a gap down, and have continued to sell as of this newsletter. We are below all major key levels. We double topped in London. We are trying to find some support at the New York AM at 55.57, but we could be consolidating and continue to sell off. Either way, zoom in and out and react to the current price action. Small picture discount, big picture discount. So I'm already looking to fill my cup up, right? Anytime we in discount, I'm trying to get long. Bullish above 55.30, bearish below 56.40. I think we actually broke above. Yeah, we're at 56.50 now. So we did get above the bearish range. The range below is invalid. So basically what happened is since we gapped down, the range that she normally uses for a chessboard, I wouldn't say it's invalid. The market's just away from that. But I would have been looking for the market to pull back into that, right? Bullish, she was looking for buyers to defend New York AM at 55.57, which we definitely did. I'll share you guys that on the chart. She was looking to target 55.79, which I don't think we went that high, 55.90, and then like the lower levels as well. All right, she was looking for a break and retest off the NWAG at 55.20 through 55.33. That was probably the best plan on the day right there, right? So bullish NWAG off 55.33. I think she actually did the opposite of that, but it's okay. It's a work in progress. And then the bullish extremes down there at 53.04, 53.14. We never hit those. And then bearish, she was looking to short weak rallies into 56.29, right? And then the NWAG at 56.68 through 84, which I think actually played out pretty well. So we'll look at that as well. And then she was looking for sellers to reject 5600 to 5602, which was my first area that I was looking for shorts as well. So let's get right into the charts and let's see how that plan kind of developed on the day. Looking at the S&P 500, again, I say special edition because again, I'm not flying blind because I know exactly what I would have done, right? But I usually like to have my pre-market plan and all that good shit, but I don't have it today, so it's all good. So we're gonna go back to my thesis from the top-down analysis, right? If you watch the top-down analysis, and again, that's out for free, in addition to in the Discord, is also out on YouTube. I prefer you go watch it on YouTube because we get views for it over there, but it doesn't really matter. Ultimately, what I'm trying to say is that we talked about this cluster of price right here being probably the most important cluster of price we've seen in this entire downtrend, okay? Because it was August 5th lows and it was the area that caused a very massive rally all the way up to all-time highs multiple times. So we knew that these bulls would be looking to have a say-so, right? So anything in this area is important. However, you go down to the 4-hour, you go back to that same area, it's important for me to find levels of fair value that I interact with on a daily basis. So all I did was I came back to this level and I looked for the nearest in-wall, which was Sunday, August the 4th. You can see this nice imbalance where we gapped down, then we found buyers. So what did I do? I marked that exact level, right, as we were coming down, and it just so happens that exact level was also the low of the day today, right? So talk about like little, remorse of not trading, right? I didn't trade today, but again, the market does the same shit damn near every day, so it's all good. But you can see this exact level, 55, 35, 75 on the NWAG. If you look in there in the top left corner up here, when I hover above this candle, the 53, 33, 75 was the low of the day, right? And what was I looking to target? My targets, NWAG at 5602, bottom of the PM session low, targeting the PM session high, and then the daily fib up here toward our first projection, weekly bullish. That's if we got extremely bullish. And ladies and gentlemen, today we were extremely bullish, right? Remember the last few days, we haven't been getting any candles wicks to the to the downside. Now we're not getting any candle wicks to the upside. It's because the market is rebalancing itself, right? It's got a lot of liquidity it can run, and it's trying to push back up to these highs, right? So we just let it do its thing. All right, moving down to the lower time frames, I want to talk about how price interacted with macro time today. And if you didn't catch this short or these longs, I want to give you guys a nice little way of looking at price, right? Outside of what I already do, something maybe even more simplified for you, right? That, you know, can help you along your way. Shout out to Pippi for breaking this down to me over lunch or after, over lunch. The 30-second opening range. If you guys aren't familiar with it, essentially don't make it difficult. The only thing you need to do is draw a line at this 30-second candle, right? And then draw a line at the bottom of the 30-second candle. If price bounces below, you get short. If price bounces above, you get long, right? Okay. So yes, that is simple, right? But context of the market can help you, right, to understand a lot better how to trade this 30-second opening range. So you can short, but where you getting out? You need to be getting out toward this in wall here. If you have macro time on, all that good stuff, then you get the bounce off the in wall, right? As soon as we get this bounce, remember, I'm gonna tap the table because I need you guys to hear this. Hear that? Tap, 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 tap. In walls, right? Somebody in the back needs to hear this. In walls are weekly levels, okay? That means that if we hit a weekly level of any sort, whether it be weekly settlement, monthly settlement, weekly, whatever, this level will cause a reaction. Now, if we bleed straight through it, we're very bearish, right? Something's wrong, right? But usually you're going to get a reaction out of this level. So even if you're in these shorts, fine, great short, love it, right? But you need to be out somewhere around this area. And then you can actually look to get back in as soon as we defend, because you can see on this 30-second chart, the S&P tapped 33.75, broke above the high, and then came back into 35, and then came back into 38 inside of 950 macro, trading down inside of the macro, and then rallying up aggressively, right up to midnight price. I think this was midnight price right here, if I'm not mistaken. Yeah, this was midnight. No, this was horizontal ray. Where the fuck was midnight? I think midnight was up inside of the in wall. Yeah. So anyway, we were below midnight, right? We were below midnight number one, right? We had an in wall below us, and we sold down inside of 930. Like, when I tell you, like, this is the classic buy scenario, right? That you have to catch this, right? Granted, I fumbled this bag just Thursday, right? Like, market was coming down, it tapped off a major level, and because I missed the level, I decided to go short, right? Up out of this level, right? You ain't got to do that, right? Like, just trust your levels and then take the trade. Now, the second level, I was looking for monthly settlement to hold support, which we did. And I was looking for weekly settlement right here at 955 to hold as support. We had the market traded back down into 1025, another entry long, right? And again, I came into the market and I was trying paper trade shorts up here, right? Because I was looking at this as a break and retest off the low of my range. We're trading up into the 1150 macro, and it actually ended up being a good short. I took profit at 58.87. I got shorted about 59.89, 59.82, 55.9825, my bad. And then I took profit down here at these lows. I ended up holding the runners just to see what would happen, right? Because my thought process is, as long as we were below 56.10, I still wanted to get back into the position, right? And then you can see once we cleanly broke above here, they stopped me out here, came back down and reestablished the range, came back down one more time. And once we got above here, if you don't like longing inside of this, wait till we get back inside of the range, because that's when the PM session low starts to act as support, right? At 2 p.m., we act as support, and then we rally. And now it's just, hey, we're inside of the range again. Now we're just looking for the top of the range, right? Like we bounce off the bottom of the range. We go right to the top of the range. We break the high. Still got that daily fib up there and all that stuff that we need to tap into. But what I want to say is, after the price action is all said and done, I want you to take note of a couple things, okay? Number one, we're displacing at a very rapid pace, right? Which leads me to believe that this is still the low of the week. We might even come down and sweep it tonight or tomorrow, right? To make a higher low, right? Inside of this wick. That's number one. Number two, however, we are starting to look dangerously bearish, right? I know Hobbs is like, you're bugging, Hobbs. Like, yeah, maybe I am. But whenever I see the market target my data highs very early on in the week, like fucking Monday, right? Like the data high is 200 points, 204 points or something like that. We're up on the day 138. The market is usually not going to sustain that pace all week. All right. So what will end up happening is we'll run up here. And yes, this will still be the low of the week. However, we can get up so high that we spend the last part of the week literally selling back down to this level. And it'll basically feel like we put the high of the weekend up here to get back to this low of the week, right? Because we'll come down so aggressively. So that's just a little thesis of mine, because again, I'm still very bearish on the market looking at the daily time frame, right? That 200 EMA, as long as we're below this, right? I'm still going to continue to be bearish, although I anticipate the market potentially running at least these highs right here. But let's see what they do when they come all the way back up here. But like I said, to me, whenever we come back up super fast like that, it just makes me extremely even more bearish, right? Because that's going to make a lot of people super bullish, right? So let's move over to the NASDAQ, because I know a lot of you trade that. I didn't have a plan for the NASDAQ, but there's a couple things I wanted to discuss about the NASDAQ that, you know, in case you missed it, you know, I'm gonna review it here. So first thing, looking at the 4-hour time frame, again, just go right back and watch the top-down analysis, because I talked about the same thing. I talked about two things. One, I talked about a fair value gap, right, being here between 18,780, right, and 18,924. I talked about that fair value gap. And there's another fair value gap right here, right above it. All these are 4 hours, so they could definitely react to price. But more importantly, after fair value gap, the range, right, on the NASDAQ, and I told you guys the NASDAQ would lead the way, right, and it is. The range that we're coming into, right, starts with this high here, April 7th, and then this low here, April 7th at 1800, April 7th at 10 a.m. This is the range. This is the dealing range. All you got to really do, once you identify that dealing range, you take a high, you take the fib, and you go from the high to the low. You identify the dealing range, right? And now you're identifying the ranges inside the dealing range, or the targets inside the dealing range, the 70, the 50, the 30, Fibonacci retracement targets. Now that we have those in purple, let's go all the way back over here, right? And look what the NASDAQ did. Come down to the 30-second chart, because that's how I trade the NASDAQ, because it's just like, it's literally crack cocaine, right? But you just look at these levels, right? And you can see all the market did was trade back into these ranges, back into the fibs, right? Because the market is based off of algorithm, and the algorithm is based off an equation. If the algorithm is based off of the equation has to have numbers, and those numbers have to be accurate, so they end up playing back into the data, right? I hope that makes sense to you. But we tap into the 70%, we drop down, and we go to my data low at 18,974, low of the day again, right? Called on Sunday, just saying. Then we get back above it, we use it as support again, the 70%, and then we just trade up all day long, right? The NASDAQ, because it wasn't inside of the in-wall, it was below the in-wall. It took a lot longer to get going, number one. And then number two, it didn't trade up as high as the other instruments because it had a lot more room to cover, right? And I said this earlier, Valdez was looking at his long, and I said, you know, this thing could rally into the next in-wall at 19,361. We ended up rallying into 19,483. So I guess I was 100 points off, but in a positive direction if you were long, right? So again, just very, very clean price action today. Again, one of those days that I'll probably regret trading, but I'm cool with it. Like, again, when you start to build a level, never mind, it doesn't matter. I'm not going to go into that rant. Moving over to the Dow Jones, right? Again, everything delivers differently, but it all delivers the same. What I mean by that is it delivered from a different area, but it held the same structure. This was the range that we were into, right? We had just left this range right here. This was the recent low, right? This was the high, this was the low, same level as NASDAQ, just different at different levels. Okay. What do? We trade back into the 50%, right? Sometimes we hit that 70, sometimes we hit that 50. In this situation, we hit the 50 right at the open. I mean, this thing rallied, I think, 900 points from this level. So again, you just gotta find your levels, man. Once you figure it out, once you figure out your levels, like you won't question anything anymore, right? And then look at the Dow Jones, right into 950, trade down into 950, and just go, right? Straight up kill count, right? That's what it was. It was a straight up kill count. So again, guys, not gonna beat a dead horse with this market review. We do one every single day, right? The volatility index is what I'll leave you with. Is it's putting in a lower high here. That's not good. Not good. No bueno. Not good at all. Right. So you need to see these buyers here at 19 through roughly about 18.6 defend, or we're going to go target these lows right here, which is going to carry this market up higher. So that being said, that's all I have for this version of the market review. Please ensure if you have any questions inside the Discord, please don't hesitate to at me in the chat. That being said, my name is T Hobbs. This is the market review and the Trader Shop. I'll catch you guys on the next one, man. Peace.